Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and events that affect the markets. Miles, we've got a lot to talk about in terms of what's happened with the metals, the dollar, etc. What do you have for us today?
Yeah, Rob, it's been a pretty aggressive week across the board for the metals. I mean, we're starting with gold up a little over 2.3-ish%. We're at 25.11. Once again, we get to start saying it again, Rob. We used to say it a lot earlier this year. Then we took a little break, but I get to say a new all-time high for about the 15th time this year, so that's kind of fun. But we were a little bit higher at 25.30, now at around 25.11, 25.12. So we will take a little look at this breakout move on gold and speculate a bit on what we think is coming up here later on the show. Moving over to silver, just running through the charts quick. Moving over to silver, anything gold can do, silver can do better, up 6.5% to 29.60 at the time of recording. And we may be flirting with $30 again here on silver. So a really big run on silver just over the past week, looking very strong, and a little bit of catch up after pushing that 90-to-1 ratio last week.
And Miles, I just want to interrupt you quickly.
Sure.
Year on year, this time last year to today, both gold and silver are up 30% year on year.
What a great stopping point before I look at the other metals. I think that's definitely worth mentioning. Thank you. And how interesting is it that despite the ups and downs and how they differ between the two metals, you stretch that timeline out long enough and you're seeing very similar results in both. So 30% move since this time last year. Not too shabby, if I do say so. Looking back at our opening charts, though, platinum, like I was saying, not to be outdone, parked right in the middle at about 4.1%, back up to 966, still under 1,000 for platinum. Still the most painful, hopeful thing that I'm still a fan of going forward. But palladium did about 1% this past week at 936, so still sitting a little bit under platinum, as we'd expect that to kind of continue that direction. Now, moving over to the underlying asset, we're valuing all this in. The dollar and the dollar index, dollar down a little over 1% this week, and we're flirting with that 100 line again. We're at 101.20 at time of recording. And despite the interest rate rises, a lot of the initial strength of the US dollar that the interest rate moves over the last year have given us, it's pretty much all gone at this point, Rob. So we definitely want to dig into the dollar. And finally, the S&P with a pretty reasonable move up, although we'll look at that a little bit closer, up about 1.4% over the last week. So, Rob, with Jackson Hole coming up, interest rate expectations coming into September, gold sitting at all-time highs, the S&P looking okay, and the dollar already losing some ground. Where do you want to start today?
I think that trend's going to continue, personally. How do you chart something when you're at an all-time high?
Sure. Yeah, that's fun. Well, it's pretty easy to chart potential reversal levels, right?
Right.
Because we can look at history and say, okay, where are we going to find a place where there might be standing buy orders or standing sell orders and people wanting to take profits at certain pricing and so on and so forth. But as far as going forward, yeah, you're really just kind of extrapolating out where future corrections could be. You know, if we go to 2,700, where would that put some correction levels on gold? If we went to 3,500, where would that show some big, major sweeping correction levels? So it does start to get a little bit harder as far as predictive charting. For me, it becomes more about just watching the momentum of a market.
Right.
And I think momentum is a great thing to talk about this week as we're looking at some breakout levels in gold. Like, what do we think gold looks like going into the election?
It looks really strong. And you know, when you look back in time and you take the big view, you could go all the way back to August of 1971, and gold has equaled the return on the S&P 500 since 1971. So instead of looking at gold as a dead asset like they joke about on Wall Street, it's a rock.
Arcane relic?
Arcane relic. Yeah, but gold itself is stability in a very unstable world. It's a rock that you can rest upon in a world of quicksand.
Oh, absolutely. So when you see these types of moves, whether they're up or down, you're still talking about gold trading in US dollars. I think that's the key, right? We're not talking about changing in gold. Gold's just an element on the periodic table. What we're talking about is the changes in the value of the US dollar. Lo and behold, gold is not going up right now. Flip the page, go look at the dollar chart. The dollar is on the way down. And there
Right.
you go. There's your answer. So you're going to have some trading in the metals like you do in any other market. And I think that's what we're seeing here. Going back to sort of an expected breakout move last week on one of our charts last week, we showed kind of multiple highs that we were moving back into with a lot of strength. And lo and behold, we've blown right through it and looking at some higher pricing now. What I'd kind of like to see going forward in the gold price, we've taken two really nice, strong steps up. I honestly would like to see between 0 and 1 more, see gold kind of peak out here in the mid to high 2,500 range. And then again, I want to see gold take a tiny breather. I'd like to see gold back down in the 2,400s, 2 steps forward, 1 step back. I think something like that could coincide timing wise really nicely, both with the expectation of September interest rate easing, as well as the election coming in November. It would not surprise me to see things calm down here a little bit coming out of the summer with the expectation of that interest rate change. I think this is a buy the rumor, sell the news event. You ask, like, what do I think about the dollar right now? I think the dollar is expecting interest rate decline. And that's why we're seeing the dollar down at 101.
Makes sense. And the economy is definitely slowing down. They're revising the job growth. We're going to see a revision, like we've talked about before, on the jobs report, either 600,000 or 1 million jobs less than they initially reported. So the economy is struggling. We'll see what happens with equities. They're holding steady, holding their breath for Jackson Hole. Bitcoin is reacting. It's up 2.5% today. It's back over 60,000. So I think everybody, with the dollar and gold being as strong and everything else, everybody's waiting for Jackson Hole.
Yeah, completely agree. And I think a lot of what silver's doing this past week is kind of catch up with what gold's already done.
Yeah.
With gold up another 2.5%, silver up over 6. But silver is still lacking some of the breakout potential that gold has already seen, in that silver is still technically bearish at the moment. Even though we had a really strong move up. Gold had a good move up from the top. Silver had a better move up, but it started from the bottom. And that's a different kind of conversation. So there's a couple of levels I'd like to see in silver. Obviously, anything over 30 is great, but arguably we're looking at a divergent move down. It made sense to have a little bit of a corrective move up in what technically is still a continuation of a bear market move down. So I'm going to need to see a few more things in the silver chart to argue reversal that we're on the way up. But making the assumption silver being the kid sister to gold, it's pretty safe to argue that all that's really happening is, as it tends to do, it takes a little bit longer to get going, but once it gets its engine cranked up, it moves pretty quickly.
Well, there's a lot of news about silver being used in a new type of battery, about 1 kilo per battery, and that's going to change the demand for silver. You're hearing a lot of buzz out there on the internet, and let's hope for silver's sake that that actually gains some traction.
Yeah, that would be fantastic. I mean, any new technology coming into the market in the industrial metals is obviously going to have positive ramifications and repercussions. You are still talking about a time lag, I
Yeah.
would think, with any new technology coming out, and then
Yes.
obviously integration. We've all been talking about fuel cells for a long time, and still can't buy them at Radio Shack. Radio Shack doesn't exist anymore. Still can't buy them at Best Buy. Best Buy's probably almost out of business too. Still can't buy them at Amazon, but maybe someday. And there's a Cybertruck in town here that I see driving around all the time. It's the only one I've ever seen, and I don't know why the guy bothered to buy one. So we do talk about these new technologies from time to time, and we kind of keep hoping for the next wave of the future.
Yeah.
I tend to err on the side of, I'll believe it when I see it on Amazon for $9.99. Maybe that's just me.
Well, keep going. What else you have for us?
The only other thing I think worth definitely digging into, despite this pretty great breakout on gold, obviously a really nice move on the silver market, is the dollar this week. I think the dollar index has obviously gotten kicked in the shins. We're looking at, I would argue, the first real downside breakout move that we've had going back since really this whole trading channel started all the way back in like 2022. So this was a important week for the US dollar. We're also back to pricing that goes back to the bottom of 2023 where we had this rising floor. Started back in July of 2023. We bottomed again in December of that year, and we hadn't been below it since. So you assumed we would have bounced it when we came back to it, this trend line, but that didn't happen. We came right through it. So, and in fact, we're just a couple pennies away from breaking below that December bottom. So if we get below the December bottom and we start targeting the 2-3 year trading floor, which is only at 99.70. Like, I'm only talking a couple bucks down from here. Well, now all of a sudden we're back into like pre-interest rate rise level pricing, going back to like 2021 dollar index. And 2021 dollar index pricing with 2024 interest rate levels is a real problem for our currency internationally.
Well, and you're talking about the dollar down at around 90, 89 to 92 back in 2021. If we're headed back down there again, that's going to get ugly.
Well, and even if we're just heading something reasonable down to like 96, you know, a 618 correction from bottom to top puts us around, well, we hit it. That's what we hit back in July of 2023. So 2 big steps forward, 1 big step backwards, and any move below that, I would argue, is some pretty significant weakness because we hit that level, we bounced it pretty aggressively, but then we just kind of sat sideways for this couple year period.
Pretty much, yeah.
So what that tells me is you're looking at a dead cat bounce in the dollar market right now. And you're looking at a dead cat bounce with the biggest interest rate rises we've seen in decades. So what's it going to take to get a little bit of oomph behind the international demand for the U.S. currency, especially if we're lowering rates?
Yeah. That's not a formula for success for the dollar, unfortunately. Yeah, so the dollar is definitely heading lower.
So I think that's the big conversation piece over the next month or two, because it's not just where's the dollar index. It's not just what's the interest rate. It's the relationship between the two.
Yep.
And where we've been in this scenario in the past. And I would much rather be at a 96 or 94 on the dollar index and a 0.5% interest rate.
Yeah, we're never going back that low.
Yeah, than a 96 on the dollar index and we're at a 5% interest rate. Those are two very different worlds.
Very different world, and it's a great point to bring out. Interest rates have increased dramatically since we were at the lows, and we're back down to where we were at that time with much higher interest rates, so dollar's going lower. That makes a great case for gold.
Oh, it makes a phenomenal case for gold. And the price of gold is responding accordingly, internationally and here domestically now with gold putting in new highs.
Yeah.
So at this point, sure, gamble a little bit if you want to, man, but I'm going to keep buying gold every couple of weeks on my paychecks. And I hope most of our listeners are too, because until our government fixes the problem, because what are the things we got to do, Rob? We got to raise interest rates. We're chipping away at that.
Got to cut spending.
We got to cut spending. We've got to diminish the Fed Reserve balance sheet. We're doing that. But it's that piece you just said in the middle there. We've got to cut spending. Or we need to raise government revenue and keep spending the same. That's the problem, right? They have no problem raising taxes, but then they'd also raise spending.
Well, they'll raise taxes, but they won't cut spending, and then they also draw down on their revenue. The more taxes they raise has a inverse reaction to government revenue because the economy generates less profit to pay taxes upon. So it's real drag on the economy when you raise taxes.
Yeah, but if you're in Congress and you're really just trying to get that next election, all you really care about is that initial nitrous in the gas tank. So, although it's having a lot less effect than it used to. So,
yeah. A lot less.
Yeah, I'm just going to keep buying gold. I'm going to keep some money in treasury bills. I'm going to look at gold silver ratio trading from time to time, study up on other industrial usage for things like metals like silver, as well as some of the things that we're using platinum and palladium for. And just be patient. The market will stay irrational longer than you can stay solvent. So my
Correct.
goal is to just stay solvent.
Amen.
Well, that will do it this week for Golden Rule Radio. So as always, we appreciate you stopping by. If you liked what you heard, hit the subscribe button, ring the bell. You can head on over and find some additional info on our website at McIlvaney.com. You can also find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. And as always, if you'd like to discuss your personal portfolio with one of the advisors here at McIlvaney Precious Metals, we can be reached at 1-800-525-9556. Thanks for listening, and we'll talk soon. Take care.